Day. May I now please invite Mr. Arnab Kumar to moderate the keynote address on FinTech, a global perspective. Arnab Kumar is the Director of Strategy for Process FinTech and is an honorary fellow at Niti Aayog. He is an alumnus of Indian School of Business, Columbia Business School and Birla Institute of Technology, Mesra. He is a CFA charter holder and a Chevening Crisp Fellow 2019. Over to you, Arnab.
Thank you, Megha and CFA Society India for hosting us. Good evening, everyone. What an auspicious day. The whole of India is remembering Bapu, the man that has been the true North Star representing the conscience of modern India. Welcome everyone to the keynote session for the 3rd India FinTech Conference 2020. CFA Institute and CFA designation for me personally has always meant integrity, fairness, and respect, and a commitment by us investment professionals to contribute to the ultimate benefits of society. CFA Society India thus could not have chosen a better day to kickstart this year's conference. With more than 2,000 companies, India has one of the largest fintech markets in the world and has consistently been ranked at the top of fintech adoption. Fintechs in India have pioneered several innovations that have become mainstream. For example, simplified, unbundled, and context-specific products, new form factors for consumers for Bharat and India together, mobile-first consumer experience, end-to-end digital stacks, etc. The evolution of India's fintech market has broadly followed the global trend of fintech adoption curve, starting with payment and fund transfers, moving to personal finance, and gradually leading to activities such as insurance, wealth management, and now disrupting traditional deposits and saving accounts through neobanks, etc. Although COVID-19 has disrupted the economy and general well-being, it has also accelerated adoption of technology across India. The last few months have seen increased openness and adoption of technology, particularly by digital markets. This wide-scale increased pace of technology adoption has been achieved by combining India's capabilities in engineering and leveraging latest technology advancements in AI, ML, big data, analytics, etc. In a recent survey, majority of the fintechs actually expect a full recovery in volumes over the next 3 to 6 months, with 34% of players expecting full recovery inside 3 months. Fintech industry in India thus can solve for India's unique needs, which could be financial inclusion, access to credit, current limited insurance reach, and can also serve as a solution provider of choice for global financial sector, which could be leadership in regulation technology, capital markets, fintech infrastructure, offshore hub for global banks, increased foreign fintech, and can actually emerge as one of the fintech global hubs of choice. To learn how India stacks up against the rest of the world and what are global trends in fintech, it's my absolute pleasure to introduce the keynote speaker for the 3rd India FinTech Conference 2020, Mr. Sopendu Mohanty. Mr. Mohanty is the Chief FinTech Officer of Monetary Authority of Singapore and is responsible for creating development strategies, public infrastructure, and regulatory policies around technology innovation. Mohanty has spent over 20 years in various leadership roles globally in technology, finance, and innovation, has extensively engaged with the ecosystem of various jurisdictions on innovation, policy making, and tech-enabled financial services. He's on the institutional investors list of influential fintech global deal makers. So what a better person to talk about the global fintech trends than Mr. Mohanty. Mr. Mohanty, over to you.
Can you hear me?
I can hear you.
Okay, yeah. Good. Thanks for having me in this great conference. In fact, I was telling Srini that it's a surreal moment for me because I tried to attempt the CFA exam many years back and I couldn't make it. So quite a moment to go and speak at a conference which I had to struggle to get into. With that note, before I started thinking about what to speak, I thought of going to your website and check out what the CFA does nowadays. And so I'm going to have a couple of slides and I'm going to share it right now for for this keynote, rather a key discussion, if I can say that way. Let's see. Okay, is the slide, yes. Is the slide visible now?
Yes.
Okay, so I went to the website, and the first thing I saw today was the digital advertisement on the CFA Institute website, and I realized FinTech is already a part of the CFA knowledge system, which clearly shows that the CFA charter has moved on quite rapidly in tune with the modern change in the financial sector. And then the next one, I went to check out what your ethics and is talking about. Because ethics and standard is a big part of your CFA thinking. And I was looking for two words. One, I was looking for, is there any reference to inclusion, any reference to sustainability, as we think about financial sector, which is a huge part of this new thinking about sustainable finance. And more, as a regulator, we are getting quite aware of what is our responsibility to shift finance to behind assets which have climate responsibility. So I was looking for, does CFA charter start influencing the charter holder when they're doing their analysis of the portfolios? Are they thinking about the sustainability part of the assets? It is important for all of you to think about the balance sheet and the profitability and the right things as you look for this stocks, and research on the stocks is also important for you to understand whether the industry has empathy for the planet we live in. Does the industry has empathy for the people with whom we all stay together? With that note, I thought of starting with this topic tonight, which is called Global FinTech Trend. So when COVID-19 started, say February or March of this year, we saw a significant shift in the FinTech focus. There's a shift from efficiency and productivity focus to resiliency and sustainability. That's a significant shift in the whole global FinTech focus. And the best way to understand, and I'll share shortly, is the numbers, the investment number which went behind this shift. But core to this COVID-19 environmental change is there are three things which became a big part of the financial sector. We saw a lot of fintechs are getting into the business of getting the whole process of payment as a cashless as the new way to go. We saw a rapid shift from physical cash exchange to digital cash exchange. You go and pick any country, if they have a right infrastructure, the cashless, the e-payment transaction went to the roof. So that's one big trend we saw during the crisis. The core digital finance become almost like a center point for every banks, because it was nearly impossible for them to go and engage with the client in a physical construct. So any of the banks, insurance companies, wealth management company, they had to fall back on the digital tool to engage with the customer. And any of these newer banks which were built on digital finance as the core become highly relevant during this crisis. The third piece, which is to me personally very interesting, and given we are in Gandhi Jayanti and also the birthday of Shastri, our former Prime Minister Lal Bahadur Shastri, who have a deep sense of empathy for a sector which was largely neglected for many years, is the micro SME and SME sector. And one biggest positive trend we saw during the COVID-19 is the focus is back on micro SMEs and SMEs. And any of this fintech who are producing software or digital tools to help the SMEs to digitize become a big part of the attraction from the investor community. On a broader macro side, we saw that any asset which is part of this ecosystem can be digitized, will get digitized. Systems, processes, and there's a massive focus across Asia, across Europe, even as far as Africa and Latin America. The banks started looking back into their own systems and processes and started putting a lot of thinking around how to rapidly digitize. And that created a massive opportunity for fintechs to get in. So let me take a pause here, because one of the challenges in this space is, what is fintech? And one of the classic default assumption we take when we hear the word fintech, we think it's a payment company or a lending company or somebody who's doing shadow banking. What we don't realize, over last 5 years, there's a particular class of fintech which become extremely popular, are called the B2b Fintechs. These are the fintechs who are in the business of digitizing banks, who are in the process of digitizing insurance company. They're focused on digitizing SMEs. They're focused on digitizing e-commerce platform. This B2B fintech started growing rapidly for last 5 years. If you look at the Asia portfolio, if you look at Singapore fintech portfolio, almost 80% of the fintechs here are in this business of helping somebody digitize. And these companies are becoming highly relevant during the crisis because they're in the highest demand for digitization, for helping institutions to get digitized. So that's what's happening on the macro space. If I have to break down the trend into 4 different buckets, the first one, there's a growth in the thinking around how to build more open banking systems, how to build more connected financial services, how can we expose APIs so that the marketplace banking becomes a new trend, how to build trusted but distributed system, how to shift from centralized systems to more distributed system. I guess we're going to speak more about when we chat about the whole blockchain space. That has taken a center stage during the crisis. And as an example, I will say that in Asia, for example, the Philippines Treasury issued its government bond on a DLT ledger during the crisis. There's a company called Bond eValue started introducing fractionalized bond during the crisis. Right in Singapore, 2 of our institutions issued a tranche of bond of Olam on the DLT platform. Why they started doing it? Because the crisis provided an opportunity to start using these tools more efficiently. So more API services, more marketplace banking, platform banking will become a big part of the new shift of the financial sector. The second part, you'll see a large global collaborative mindset, because fintechs by design has to scale beyond their domestic market. You can't be called as a successful fintech if you're only succeeding in your jurisdiction where you started your journey. You got to be in multiple countries to be called as a successful fintech. So there's a need for fintechs to step out of their domestic boundaries and get into different countries and be part of different ecosystem. And thanks to the platform thinking, thanks to large e-commerce who are getting into space, a lot of fintechs are getting opportunity to operate in multiple markets. You will see a lot of experimentation happening together with banks, with insurance companies, among fintechs. If you go and Google, you see the number of partnerships being built every week is something which we didn't see before the crisis. Stack of solution to solve. Sorry, my video.
Sopendu, you are fine. Please carry.
Okay. Then the third piece is the rise of global digital infrastructure, and this is interesting because India is a leader in this space. The whole Aadhaar and the Aadhaar stack is an interesting example of how national digital infrastructure playing a key role in this new design. Singapore also has a similar digital infrastructure. We have something called our own stack, similar construct, digital identity, trusted data systems, a highly interoperable payment system, consent system, which allows citizens to consent before you can use their data. So globally, there's a trend that every country started thinking about building foundational digital infrastructure. You will see more and more countries adopting national stack, which is a very good trend, because at some point of time, you want somebody from India or to be able to send a payment to Singapore just by knowing my mobile phone number. Today, in Singapore, I can send to somebody's mobile phone number which are a proxy for the bank account in 3 clicks, 0 cost, a bank transfer. By end of the year, I can send to somebody in Thailand, if I know their mobile phone number, a transfer with minimal click, with minimal cost. Why it is possible? Because Thailand, Singapore have built similar stack, which are now getting connected. We are hoping by 2021, we should be able to send in a similar way to India by connecting our own payment system with India's payment system. There's work ongoing with NPCI. You will see a similar connectivity getting developed between India and Singapore. So as countries are building their national infrastructure, you will see that start getting connected, and that will be a big part of the new design of the financial sector ecosystem. Again, fintechs are going to get benefit because they're going to ride on this national infrastructure to build innovative products. And the last piece is around new talent construct. And this is what we saw during the crisis, because as companies are building their new tech stack, the kind of employees they're going to start hiring will be quite different, which was before the crisis came in. More tech skills are required. The more business models, which is based on technology stack, will be a new skill set which will be expected from the market. You will see people upskilling themselves as they become part of the new workforce of the digital finance. So a lot of focus on new talent construct will start happening. Countries will put policies in together. In Singapore, you're putting a lot of upskilling schemes to allow a lot of our people to upskill themselves, so they become relevant in the new construct, so that banks, insurance company, fintech start hiring the people with the new skills to the workforce. So there's a significant structural shift you will see on the workforce itself as they're getting ready for this new construct. So broadly speaking, this is what the global trend looks like. And we will say that one of the positive of this COVID-19 is that it accelerated the process of digitization faster than any period of this whole journey of adoption of technology in the financial sector. Now, there's one way to prove that is it real? Is the shift really happening? Is to go to the next slide. Sorry. Now, this slide, all you have to do is to look at the last column, the first 6-month trend of the fintech investment. Look at where the money has gone. Investors have heavily focused on 2 big sectors, which is insurance and SME banking. Why? That's what I was trying to say. Because as we're getting through the crisis, as we'll come out of the crisis, the backbone of any economy, the SMEs, will require a lot of digital services. Any of the fintechs who are in the business of helping this SME to digitize, or any of the banks who are focusing on SME, will see a lot of interest from investors. That's where the big money will flow. You will see a lot of technology being used in the wealth management, whether it's wealth advisory, or it is a bite-sized investment, or a small ticket investment, or retail banking digitization. Even corporate banking will see a lot of technology going there as part of the reconstruct, especially in the trade finance space. So as you can see, the numbers, the investors are also following the macro trend. They're putting money where they think the best opportunity lies. So that's all this slide talks about. It talks about where the money is following, where the sectors are going to be the most attractive sector in the space of fintech. And which was exactly what we want the sector to look at. Look at the sector which has been largely ignored in this whole space is SME, micro SME, getting micro insurance up there. Pension plan. One of the challenges in this industry is that lack of sustainable pension plan. Micro pension will become a big part of the demands as we look at the future. In fact, one of the biggest time bomb waiting for many countries is the pension gap. And that part of the financial sector has largely been unaddressed. And there's a need for technologists, the need for asset managers who can focus on providing a product which will support the micro pension structures. So the investors are also following the micro trend. That's in this slide. The next one is what the policymakers are doing. Here, we are also following the macro trend as there's a desire to connect. As regulators, we are also focused on ensuring the market infrastructure or the payment infrastructure interoperability is what every regulators are demanding from the systems. they expect systems to interoperate so that it becomes a critical part of this economic recovery. So you will see more and more systems through regulatory incentives becoming far more connected, far more interoperable, not only within the country, but outside the countries as they start getting connected. The second part is the data regulation. Here I'll spend a couple of minutes because before the crisis, I'm sure all of you have heard about something called data localization. It is almost a draconian policy of restricting access to data by many countries. And India also had its own new data policy, which talked about restricting access to data from outside India. But COVID-19 has changed all this thing, because for many markets to be part of the recovery, they must start exposing the data to ensure trade starts recovering. And there is a need for policymakers to rethink how to rethink the whole data regulations piece, because trade finance, exports, imports need a lot of access to data. You cannot physically travel to this market. You need to access on data to do trade finance. And if data becomes localized in many countries, very hard to do a digital trade finance, very hard for investors to look at opportunities, very hard for banks with multiple jurisdictions to manage risk management when they look at a company-wide risk middle office functions. So there's a need to rethink the data regulation piece. One way to look at is to start building trusted data corridor between two regulators, between two countries, through a mutual understanding of how to manage data responsibly. So this becomes a big policy topic. In fact, yesterday I spoke on this topic, and every regulators are looking at data regulation as a key enabler in the COVID-19 recovery. So hopefully we'll see some opportunity of refinement to the existing data regulation in this space. The third piece from a regulatory perspective is that many countries, especially in ASEAN market, they're issuing something called digital bank license. These are new licenses being issued. In fact, ASEAN alone, the 10 countries in ASEAN have issued close to or going to in the process of issuing 20 plus digital bank license. These are licenses given to new entities who will have a digital bank platform, no branch banking, no cash transaction, completely digital. And it's something interesting to observe, to look out for, because they're going to, within existing licensing regime, they're going to compete against incumbent banks. And this is with within the regulatory framework, and which can turn out to an interesting value proposition, because they're going to compete against incumbent structure and same time they're going to compete against the growing fintechs, which are also coming in a different form, because there are two kinds of license regime which can affect this sector. In many countries, people are issuing what you call activity-based licensing, where you are giving license for a particular activity entity intend to do. For example, in Singapore, we have a new Payment Service Act, where we are issuing license under 7 different constructs. So if you are issuer of the payment services, you get a license for being that to serve that part of the business. So you will see modular licensing being issued as different fintechs approach licensing regime, either as a whole bank or doing a particular activity. So different license construct will be part of the policy shift. And the last piece, which is the sandbox. Regulators have long been called out not being part of this exciting journey of experimentation in the space of technology. Many regulators globally include India, also started putting regulatory sandbox. What is regulatory sandbox? Is essentially a platform or a framework where regulators will participate with a fintech or a bank to experiment with a new idea or a new technology with a new business model. And once you're through the experiment, if it is successful, they'll give you a certain policy waiver to run that business. Interesting model. In Singapore, we have been running for the sandbox for 3 years. We have interesting company which have graduated from the sandbox. The last one was yesterday night. One of our sandbox client called Bond E-Value, which is in the business of fractionalizing bond, came out of the sandbox and they got a license, and they'll start operating. So there are many examples in this space where you will see fintech company getting licensed, but the license through a sandbox process where they're trying out new business model. In fact, out of the 10, 11 companies which graduated from the Sandbox, almost half, and this is for Arnab, almost half are in the space of blockchain. So regulators are in the business of helping new companies, new business model to see through this process, and they're being able to operate within the licensing framework. So that's the policy trend. And just to sum up my thinking here, I want to remind all of us that one of the biggest shift on the policy side would be the extremely high focus on sustainability, because during the crisis we have seen many examples where migrant workers have to shift from the cities and they couldn't survive a day because they had no access to financial product which can see them through the crisis, which means financial inclusion becomes a big part of the problem statement which got to be fixed. Sustainable finance is critical. Whether you look at the EU regulation or you look at the upcoming regulation in Asia and many market, there'll be a trend where you'll be expected to disclose asset which is climate friendly. So you know if somebody's holding a portfolio, what percent of asset is there which is supporting the climate initiatives. So you being the CFA charter holder, I'm sure this is a new area for all of you to think through, because as you're looking at at different companies, you got to look at whether they are being empathized, whether they have some empathy for the planet we live, or they have empathy for the people with whom we live around. So empathy, support to the ecosystem, building a comprehensive, a sustainable ecosystem will be a big part of the shift in whether it's a policymaker or fintechs or the banks. Thank you very much. We can take some questions from Arnav.
Thanks a lot, Sopendu. What a fantastic address. I, for one, was taking notes furiously. I'm sure a lot of our viewers and listeners were doing the same. So we will spend some time, and I had a bunch of questions. So let's go through some of them, and then we will take some questions from the audience. So if you have questions, please send your questions to us, and I'll be fielding them with Mr. Mohanty. So let's start with one of the key themes of your address, which was around distributed ledger technologies, blockchain solutions. Singapore and MAS in particular has been the pioneer in leveraging DLT solutions. And most of us would agree, I mean, a lot of us who are on this panel listening right now will agree that this is the technology of the future. This will power the tech stacks, especially in cross-border remittances, payments, and settlements. From an India perspective, while there have been several green shoots, we haven't seen any large-scale successful application for DLT implementation. While you just mentioned half of the companies in MES Sandbox are from delivering a DLT solutions. So if you had to compare how we have achieved this in Singapore and what has been India's playbook so far, what would be your suggestions to us? What could be the various levers, policy, regulation, technical capabilities? Give us your playbook.
So our playbook was that we started accepting that we don't understand DLT. I think the first thing as a policymaker, as a regulator, you must have the humility to accept you don't understand this. Once you know that you don't understand this thing, you'll stop making policy saying that I don't like DLT. Because you can't make a policy if you don't understand what it is. So one good thing we did in 2017-18, we went out, we told that we don't understand this technology. Let's experiment. Let's start to understand and partner with somebody who can teach us what is DLT means, what cryptocurrency means, what digital currency means before we start making policies. So ignorance is not the best way to start making policy. The best way to make policy is to experiment, and then you start thinking of the right way to do things. We started a marquee project called Project UBIN, UBIN. In fact, I'll encourage all of you to go and to our MAS website and download 5 reports which came out over the last 3 years. So we thought that the best way as a policymaker to understand the space, we'll take a use case ourselves. So the use case we took, can we reimagine our own payment system on which will be a DLT-based architecture, and we can issue a digital currency version of Singapore dollar into that platform and see how that experiment goes. And it was not an experiment which we tried finishing in 6 months. It was 3 years, 5 phases, And we went through a public partnership. We got a lot of banks, a lot of tech companies, a lot of DLT companies. And we went through this 5 phase to understand this whole technology. In fact, we started putting source code, very unusual for a regulator to put an open source code in, you can actually go and check, where we start developing code to replicate in DLT construct how a payment system will look like. So you go to GitHub, there's an account with MAS, you can see all the source code out there. So we started understanding this space, and the last part of the report came out last 6 months back or 3 months back, where we laid out the framework that we believe there are 2 kinds of currencies. There's a retail CBDC, or there's a wholesale CBDC. We as a central bank believe, understanding Singapore's need, wholesale currency is the future, and there's this framework under which we can reimagine our payment system. And the use case, which we strongly believe will be the future, is use of DLT and wholesale currency in the cross-border payment space, especially in the settlement side. So that's one approach. We took a use case, we looked at it, and there's a policy implication. What are the policy implication? We revised our Payment Service Act. Within this Payment Service Act, there's a section on tokenized on people who are dealing with tokens, and there's a regulatory prescription for that, those set of businesses, and our stance is there. So we got our policy refinement based on this experiment, learning, and so forth. That's one way. The second way, we also strongly encouraged within the framework of regulatory sandbox or through market participation to start looking at making DLT as a way to make existing processes efficient. That's the reason why right through the crisis, 3 industry took off big time in Asia. Almost close to $60 billion of trade finance went through in many parts. If you take the Asia volume itself in the space of trade finance, $60 billion. That much money went through a DLT network for trade finance, which is unprecedented because you never hear this number. Philippines Treasury issued their bond on this ledger, on the DLT ledger. New bonds were issued in this platform. Fractionalization of bond took place in this DLT platform. These are all production grade platforms. These are not tests. These are not POCs. So these are the example where a regulator works with the public sector, with the private sector. We also looked at university. In fact, one thing we also focused building the talent pool. We worked with academic. We worked with the polytechnics. We worked with the universities. We ensured the curriculums have the right content, so that 3 years from now, I'm talking of 2017. Now we have one of the most largest pool of blockchain technologies in Singapore. So it's all collective, comprehensive thinking. If you want to change the shape of the future using this DLT platform, so that is our playbook: experiment, build good talent. I think market forces will take you forward.
Thanks a lot, Sopendu. That was very comprehensive. I, for one, am a big fan of the project Rubin. And earlier this year, while I was at Niti Aayog, we had come out with a playbook for DLT implementation in India, where we took a lot of inspiration from what you guys have been doing. Sticking to the theme of digital infrastructure and financial infrastructure, India's approach to digital and financial infrastructure has been one of public-private collaboration, which you also mentioned, and it has worked well. I, for example, spearheaded the development of Arogya Setu, which is India's COVID-19 contact tracing mobile application. Can you build on this a little bit more and give us a few other examples outside the DLT parlance of how we can keep enhancing India's digital and fintech ecosystem? Do we stick to this playbook of building massive digital infrastructure? You mentioned in your keynote about UPI and various others, and we have come up with a few others: Ocean, data empowerment, protection architecture, etc. Is that the playbook India should do? I mean, the government should build and private sector should keep innovating on top.
It's an irony. We are inspired by India than any country, because our own inspiration building public infrastructure is India, because India built Aadhaar. India built the whole UPI rails, which is to us a big miracle for a country with 1.2 billion people. I think that's we are always looking at India as an example of a success in this space, and that's why Singapore was a big fan of India's infrastructure. Our model of public stack was from the India stack inspiration. So we took that, we built something, but we also build a little more better, because because a small country, we can do things a little more, more efficiently. We built one of the largest public database of trusted data. Today, if you want to open a bank account, You just have to go to My Info, which is a public infrastructure for data. One click with consent, you can pull all the data and open a bank account, full KYC, not like a partial KYC. So infrastructure, public utility will become the playbook. I just want to share with you one interesting example for India, as a country where we'll see this coming very soon. And I cannot announce this because it was approved yesterday by my home state in India, Odisha. There's a company called InfoCorp. And this is a huge inspiration for me. Given it's Gandhi Jayanti, I want to talk about this little with this example. And also Shastriji, who started the whole white revolution and green revolution. I think there's an opportunity to India to do something dramatic like the white and the green revolution. This company, InfoCorp, what it does, it has got this philosophy that, and it's true, that 70% of world's food supply comes from marginal farmers. And most of these marginal farmers don't have access to collateral. And banks needs collateral to give you credit. Unless you're giving some grant and you farm wherever, that's a different thing. And this company went and found out most of this marginal farmer have got one asset. So it's called the livestock, cattle, goat, sheep. And this, can we tokenize this asset? So this company went around, built a model in participation with the government officials, veterinary department, a process of tokenizing livestock. Now, this will be implemented in Odisha under a new program with UN, where millions of marginal household who have this livestock, cattle as the collateral will be tokenized in a DLT asset, and this tokenized livestock will be used as a collateral for the bank to extend credit. Now, if we can start a similar revolution in India to build an alternate collateral by looking at asset which traditionally being not looked at, it can create huge credit opportunity. So one way India can start thinking about what are the assets which he used an interesting term called dead money which is not, or the asset which is not visible, where you can use as a collateral, suddenly make it active or alive. And if you can think about some examples like that and find a way for India to take an advantage of this technology and build a mass scale, super scale registry, DLT registry, where you can tokenize all these assets, can be one example to look forward as a way to take advantage of such technology. So you have public infrastructure, you have public payment systems, you have public data systems. And I'm sure with this opportunity, a lot of this DLT-based technology, a lot of this API services can come together to build another scaled platform with such innovative way to solve India's crisis for economic or opportunity for economic growth. Especially in COVID-19, things are going very bad. We need to think differently. You can't just have traditional approach to fix this problem.
Wonderful. So, Sopendu, we got a question from one of our audience, Jaswinder Taneja, and I think you have partially answered that question. Do you see digital tokenized assets impacting the investment landscape in a large manner in the next 1 to 2 years? By when and how do you see the impact meaningful for the larger world and also for mid-sized investors to start taking notice?
I think, let me be careful on this. Sometimes when you say digital asset, people have different understanding. When I talk about digital asset, I talk about an asset backed by a real asset, a digital token which has got a real asset, not a computer program. So or a utility token which has got a real asset, whether it is a livestock or agricultural produce or a currency. So a token which is based on real asset, which can create market liquidity, which can create an opportunity to expand credit, which can be used as a payment instrument, will have a huge growth, especially when we are going for a low touch and high tech economic construct coming out of COVID crisis. You must think about a digital asset as a way to represent your wealth or your asset and start using that as a way to grow the economy. Yes, absolutely. There's no doubt in my mind, this will be a huge focus area. Investors will come after this space.
Wonderful. Another question from one of our audience, Maitri Patel. On the point of financial inclusion, how do we address the touch and feel that traditional banking provides as against the fintech? The underbanked, mostly in rural areas, needs something they can turn to for developing trust. like a branch. So how does it morph into the fintech and digital world?
I think, I don't know whether which rural village has a touch of bank anyway, because I've never seen a branch operating in some sense in any rural village. So they're already touchless in that form. I think that now they have a mobile phone, which they're touching. Now they have a device, which is part of the system, part of that. They understand the device well. And you go to any village now in India, they have got a phone. Now, how do we get our bank into that little device in the most intuitive way? How do you ensure that it's a safe banking service? And if we can find a way to collectively think through this and ensure that the bank in that phone is something they can use, is way to go for. And that's where they can touch and feel, because they're already used to that device. Now, as an example, this is for individual banking. Also, part of our initiative with some of the states in Odisha, we are working with a company called Global Linker. It's an India-based company. What does Global Linker does? It provides a set of tool for small farmers, small merchants, marginal merchants to go and put an e-store. And with that e-store, they connect that e-store to whole set of services from logistic, from finance, to connect to buyers, suppliers. When you build this digital avatar of all the small marginal people, you take the physical store to e-store right into the village using this platform. I think you create a huge opportunity to start using or metaphor of touch and feel. So that's the way to go. And I think the trend is out there, and I'm sure India is going to lead in the space. And I don't see any reversal in that trend.
Great. So we discussed, Sopendu, we discussed about the inspiration that Singapore has taken from India by building massive digital infrastructure solutions. One thing that Singapore has been very, very successful, and you have been one of the champions of that, is ensuring that these technologies are then exported outside Singapore. You mentioned about experiments in Indonesia, in Philippines. I was part of the PM's delegation in 2018 when India extended RuPay in Singapore. What's your suggestion on how we can keep exporting several of these digital infrastructures that we have been digitally building in India over the last several years to rest of the world?
I am not, the word export sometimes can cause a negative reaction. So the way to do that is to think about collaboration. So I think that for technology to be part of, suppose there's a successful technology in India and you want to share it with a country, I think the best way to start is to start collaborating using some program. Get people comfortable with your technology. Let them get used to the power of the technology which you have done. Once they're comfortable, I'm sure there's a mutual trust which leads to adoption technology. One thing you have to keep in mind, policymakers are worried about cybersecurity. Policymakers are worried about data. Policymakers are worried about IP protection. Policymakers are worried about the talent which will require to support the system. If we don't find a healthy, sustainable way to come together and build partnership, pure traditional export is not going to work when it comes to technology. So it needs a lot of handholding, collaboration, partnership, success story as you go along.
Sure, I think that's the right way to think of it. Collaboration more than just planting a technology elsewhere.
And also sharing technology. Also ensure that the country you are partnering are also benefiting from the technology, and there's a meaningful sharing of the value by both the parties.
Sure, I think that's a fantastic way to look at it. In your keynote, you mentioned about digital banking licenses and the different approaches that you have taken. One of our audience, Ranjit Kumar, has asked, how does this impact the future of incumbent banks and the challenges, competition they are tackling against the neo banks? Will the traditional bank or the banking that we have seen, at least I and you have seen growing up, will that survive next 20 years, or what we will see is just neo banks?
No, I think most of the banks, progressive bank at least, are moving to. I just saw State Bank of India, the Yono, they're talking of hiving off or or separating that to a new digital entity. I think traditional banks are also picking up. They have a huge trust base. You can question them. You can criticize that they're not taking care of the digital need, but they have a trust with the existing system. They have customer. They have real deposit. neobanks don't have the deposit and scale yet. So they still have the advantage of the customer base, the advantage of the deposit base, the advantage of the distribution base. I think if they adopt technology, definitely they'll have a level playing field. And when you talk about the new licenses, even the new banks which are going to come, they're going to also comply to the licensing expectation. By the way, complying to licenses are not easy. And there will be a level playing field between the newer bank, the licensed one, when it comes to operating in a market within the licensing system. So I don't think the new digital bank license are going to put incumbent in a disadvantageous position. If at all, it can accelerate the process of digitization for the incumbent bank. If that little bit of uncertainty is good, I think we should keep that uncertainty out there for the incumbent to pick up and digitize faster. Sometimes that's good for the ecosystem.
Great. We have a question from one of our audience members, Swetav Samir. From financial inclusion perspective, how do you think FinTech will help migrant workers in the times of COVID? Can you share a few examples? Yes. So I'll take one example that I'm aware of Sopendu, and then you can build on that. So I think a few people in the government have been working on a solution, and it was out there in newspapers, etc., called Project Kashi, which is building a credit solution at low or small ticket loan items for people who are dependent on direct benefit transfer. So what it is doing is that it is assuming DBT as a proxy for income, and people who have been getting a constant stream of DBT. How do we address the mismatch of supply and demand? Is what has been, as far as I know, has been trying to be attempted by this Project Kashi. But what could be other examples where tech and FinTech can be used for COVID migrant workers?
Well, I've taken some name because every time I finish a keynote or a talk, people say, "Why didn't you take my name?" And as a we have a moral hazard of taking names and examples. But I will give generic examples because it will be unfair on many. Because in this space, many companies are doing remarkable. I'm not telling because I have to say this way. India has been a shining example when it comes to financial inclusion, especially on the payment space, credit space, invoice financing. There are tons of examples out there. So I think India has done a great job. I have only one complaint. India has not focused on micro pension. India should get the best brain and the best FinTech company to start thinking about building a risk product, micro insurance, micro pension plans. There's a beautiful article with my friend Sanjay and Gautam Vardwas from Pinbox wrote during the crisis. Right at the starting of the crisis, within a month, millions of migrants left their cities, went back to the villages. In spite of spending decade of time in the last city, they couldn't sustain a month, which means they had no savings, which means they had no insurance, which means they had no pension plan to rely on, which means the whole construct, a sustainable inclusion plan didn't work, period. So India has done a remarkable job on the payment side. India has done remarkable on the credit side. A lot of fintechs doing great job. My sincere request to the bright brains, boys and girls, men and women out there who are focusing on this space, think about insurance, pension plan, micro savings, micro investment. Why should we deny poor people or low income segment from the wealth side? Why can't we have a $1 ETF and some fancy product like that? Build a system, build a micro product, a micro stack. And I think that's a comprehensive stack, which is not only solving one part of the problem, also solves the risk side and the crisis side. When you are in a crisis, you can deep into those savings. I think that's the opportunity out there. And my friend Gautam and Parul Khanna from Pinbox, I'm taking this moral hazard of calling out them. They're focusing on micro pension. I hope they do a good job in India because that's a huge demand in that market.
Sure. So wrapping up this fantastic conversation with one last theme, Sopendu, and you and I had discussed this. So the role of people, more of you and less of you, people like us, are ecosystem builders. What we have seen in the Indian fintechs, Indian startup ecosystem in general and fintech in particular has been the robust access to capital and funding to well-developed PE/VC ecosystem. I mean, fintechs in India saw about 2 billion investment in 2019. Yet we haven't seen traditional capital market exist, which is IPOs, large M&As, etc. VC investment remains glamorous, but for several of fintech companies, it's the only viable option, and it's the most costly option also. So, your thoughts on that? I mean, structuring the Indian fintech market.
Couple of years, and maybe 2 years back, I was in a conference in Mumbai, and I raised this problem, and I was rudely shouted out by one of the VCs saying that, who told you don't have money? We have a lot of money in India. Fintechs don't have a money problem. So at that, I kept quiet. Actually, India has got a lot of money. Maybe I'm hallucinating as there's a challenge out there. Now, given you asked this question yourself, saying that there is a challenge in accessing fund, absolutely. I think VC will chase for returns, and they will look for opportunity where they get the best return. And of course, the space they will go is there's a crowding out will happen in certain sector. You ask a VC to say, are you going to invest on a micro pension? I can guarantee you they'll love it. They'll get inspired, but they'll say, I'll come back to you later. Show me your volumes and show me your product. I'll talk to you later. So the social impact of VCs is very limited. So I think there's a need to build a social impact fund. There's a need to find a way to create capital where you can extend that different creativity in the space to areas which has been largely neglected. Also, there's an opportunity to create a public fund through some public grant or scheme to create a seed money which can be used to kickstart certain project, because sometimes seed money also becomes very difficult to access. And during the crisis, we in Singapore created a seed and a certain kind of capital access called we call it Solidarity Fund, which is essentially to create encourage fintech company who have building products for COVID-19 recovery to access such fund. So creating a public money, public scheme, some kind of social impact fund can help to build a wider capital access in the space. But I'm very afraid to say that India has a problem, because every time I say that, I get a lot of negative comments. So I'm going to say sorry to these people again that I've said this nth time that there's a challenge out there.
Yeah, I absolutely agree with you there, Sopendu. We have to rethink this. I mean, traditional exits and other sources of funding have to be solved for India. We have a few. Sorry,
and there is also a lack of patience, because as I said, that the B2b Fintech takes 5 to 8 years to mature. There's a need to have a higher tolerance on holding on to an investment for a longer period of time. I think 2 to 3 years, you're expecting somebody to flip out, very difficult.
Sure. So I know we are a few minutes past the clock, but I'll request one final question so that you can answer that. It's from Varun Vasudevan. What are the emerging technology trends in B2B Fintech space in India? What technologies would you want the Indian regulators to push in the Sandbox framework?
I think definitely on the B2B side, one thing regulators, and this more not from Sandbox perspective, but I'm personally very worried, is the responsible AI. Because in fact, this year, we have initiated a Ubin-like program in Singapore called Project Veritas. It talks about introducing source code or experimenting with source code, which will look at FEAT, fairness, ethics, accountability, and transparency. If regulators can work with the fintech ecosystem, build AI, responsible AI, then inject them on the data set available and build a different, create a different innovative product set, especially on the B2B side, will be a great opportunity. That's one. When I say use AI, I want to use responsible AI. Given you all are charter holder, you all love this word ethics. So it better be a responsible ethical AI as part of the construct. The second technology I think is going to be a big part of the construct is, I think we have a time has come to productionalize the word DLT. It's no more a pilot proof of concept anymore. There's a real value of decentralized way of doing things, building trust on the data set, and DLT provides the platform where you can build a trust system on which data which is recorded are truly trusted. So having a DLT-based technology construct with the regulators' help will help the Indian ecosystem to build a futuristic B2B construct for the fintech sector.
Thanks a lot, Sopendu. I think we are a few minutes over the clock. But it has been an absolute honor and pleasure to have this conversation with you. I'm sure a lot of our charter holders, audience who have tuned into the session have learned a lot. I personally have gained a lot of insights speaking to you over the past hour or so. Thanks a lot, Megha. Over to you.